Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today our guest is Keith Nelson. Thanks for being on the show, Keith.
Thank you, Whitney. Thanks for having me.
Yeah, it's great to have you on the show. And Keith is an investor-first philosophy. I like that. And consistent paying returns. A conservative approach to investing, hitting singles versus swinging for the fences, and flexible and adaptive problem solving. So I love that, preservation of capital. So awesome stuff, Keith, and I'm looking forward to diving into that. And I know just a little bit about our conversation before we got started. Just your focus on having multiple safe falls for preserving capital, and which is so important. I'm looking forward to talking about that. But give us a little more about just who you are and how you got into this industry, maybe a little bit, and then let's dive in.
Sure. Well, like I was telling you before, I had a pretty interesting career trajectory. You know, I was a DEA special agent in New York for 4 years before me and my wife moved to South Carolina, where I took on a teaching career for a couple of years before I dove into real estate. And before I even knew what syndication was, it was, me and a couple of buddies from New York trying to buy a 12-unit multifamily down in South Carolina. And took me about 2 years to buy our first asset. And then that just kickstarted a career in commercial real estate. And, we started a real syndication company, Dual City Investments. And then we went on to creating our first fund 2 years ago.
Nice. Well, 2 years to get into that first property, and a lot of people won't stick it out that long. So what was it in you that said, you know what, we're still pushing forward. We're still going to make this happen even after 2 years?
Well, I was doing it part-time, right? I was teaching and looking for assets in my backyard because the introduction of positive cash flow to my New York, friends and family was a foreign concept. They'd buy assets and, rely on the appreciation of it. And I saw stuff down here that had positive cash flow. So me and a couple of buddies, my ex-partner from New York, just chipped in some money, and, it was my job to go find that property. That's probably when I quickly realized that relying on commercial brokers is not the best way to find assets. So it propelled me into, well, if they could do it, I could do it too. So I left teaching, went into commercial real estate to learn how to find those assets myself. And well, that's a whole nother story. I'm not really no clear-cut path in teaching that, but I did go in, as a buyer first. And I think that helped me, on the commercial brokerage side of things on how to move real estate and know what's a good deal and what's not a good deal. Yeah,
so that's interesting, becoming or going on the brokerage route. But really your goal was to buy, right? And learn how to buy. And so, is that a route that you would recommend to others now, is to pursue maybe a career with a brokerage firm to learn that side of the industry?
I would, just for the fact that I don't know what your experience is with brokers, but mine is 99 out of 100 have no idea what they're talking about or looking at. It's astonishing, how people have careers in that business and just don't know basic information. So it was a combination of that and having no track record trying to get the decent brokers to call you back was just a nightmare also. So, I mean, if you could find a good one or a good couple, that's great. I think it cuts the learning curve down a lot, but I just couldn't do it. So I had to figure out how to do it myself.
Nice. I love the mentality of, we're just going to go figure this out. And you said earlier, if they can do it, I can do it too. And I've had to say the same thing to myself, when I started learning about real estate on numerous occasions. You meet somebody else that's doing something that you didn't even know was possible. And it's like, wait a minute, if they can figure it out, I can too. So I wanted, jump in, and really highlight some of the, just how you have multiple safe falls for preserving capital, maybe what that looks like. And let's go through that a little bit, for you and your team. But first, tell us, like, what kind of properties are you all looking for, and what's your criteria?
Well, we primarily started in multifamily. That's what we cut our teeth on. The market was good when we bought our first asset in 2015. We probably bought 6 or 7 straight multifamily, getting larger and larger each time we did it, to start with. But about 2 years ago, multifamily industry really dried up a lot, and we had to make a pivot. So we started looking at other asset classes, and I learned, all about those, a lot through trial and error, but, a lot of research, a lot of reading, a lot of educating. So we got into self-storage. We later, in our fund, we have an office building in Ohio. We have a boutique hotel in upstate New York, storage, apartments. We pretty much run the gamut on investments. If it's a good deal, we look at it, kind of reverse engineer it, and then we'll study the market to see if it's a market we want to get into. But we had to make a pivot when more and more of these syndication groups and funds were being created. It squeezed the market so tight that it couldn't make sense of buying multifamily anymore.
Nice. Well, I love the flexibility, and not just giving up there and figuring it out, making it happen. So tell me again. I know you said you had an office and hotel and multifamily and self storage as well.
Yeah. Self storage is probably the next largest class of assets that we control. I personally like it better because it's, you always hear the expression, no tenants, no toilets. I also like it because if, people don't pay their rent, you get to auction their stuff off. So, I do like that industry, and thankfully during this whole COVID thing, our numbers are holding steady, and actually in self-storage, they went up a bit. So.
Nice. So are those units, are those properties, are they all over the country, or are they local to you?
Primarily in North and South Carolina, the storage stuff, because there's a little more hands-on. You need, some asset managers and whatnot. But that's North and South Carolina is all our storage.
What's maybe a couple crucial points to going into a different asset class like that, since you've done it numerous times in different asset classes? What was a couple crucial things that you would tell the listener to do before they, maybe they've become experts in multifamily, but now they're kind of feeling the same way. Well, maybe I should go try self-storage or office or hotel or whatever. But it's we haven't done that yet, right? So what are a couple of things they need to be thinking about before trying another asset class like that?
Well, like you said before, if they could do it, I could do it. It's just the mindset. Just dive in, learn as much as you can. The other thing is that, it helps. We, not necessarily for storage, but when we purchased the hotel, we brought in a hotel manager that knew what they were looking at and talking about. And that was a little more complicated than the storage. The storage, if you could do multifamily, you could do storage, just like you could do mobile home parks. They're all, I think, run pretty similar. But my advice is, if you're going outside your sphere of expertise, get someone that knows what they're looking at and what they're talking about, and rely heavily on that person.
Great advice. No doubt about it. So let's jump into some of the safe falls that you all have in place for preserving capital. I'd love to dive in there a little bit.
Sure. We'd like to come up with at least 2 strategies of, what we're going to do when plan A doesn't work, right? And I think it was Mike Tyson that said, everyone's got a plan until they get punched in the face. That's real estate in a nutshell. Every property we ever took over, nothing goes 100% to plan. So you've got to be able to pivot and fall back on, multiple plans. So where we've been successful is having that plan B and plan C, in place, in case just, hey, we're going to increase occupancy, increase the rents, and we're going to make a lot of money. It doesn't work. What's our backup strategy? Case in point, for the boutique hotel that we bought, they were you were able to convert the units to condos. And it was in an area where housing was a shortage, condos prices were high. Condo conversion makes sense there. So if we can't keep the occupancy or something happens, we could have always fell back on, conversion or something like that. We've bought properties before where storage was our, B or C plan. Like, okay, we're going to buy this industrial building. We're going to try to lease it up. If that doesn't work, okay, markets, the feasibility study in that area says storage may work. So, we do our numbers, obviously, pro formas ahead of time. And, that doesn't work. We did that with a couple of buildings, turned it into indoor storage and then moved on. So, I probably have 100 examples, but, just to think outside the box, have those safety nets. That's what our investors, I think, appreciate with us, the most is
for sure
protecting their capital.
So, like the hotel that you did convert units into condos?
No, we actually didn't have to. That was one of the one of the few that it's fairly new. We've only had it for a year and a half, so it's always a backup plan. But so far, we're doing pretty well with that.
Yeah, no, that's awesome. At least you have that plan there. But help me to think through that a little bit, and the listener. So you are, like even like the storage that could be, or if you bought industrial and you could turn it into storage. What are some things you're thinking about there, though, or how that this is a valid plan B?
Well, we have software that tells us, square foot per capita and all that. So, median income, and just owning storage the last, 5 years has taught us a lot of what to look for. But, if those numbers work, pencil that in as, plan B and have the capital to do it. It's not crazy expensive to convert a, empty shell into, indoor climate control storage. So, thankfully the plan worked, and, that's what we hang our hat on, just being adaptive.
Yeah, no, that's awesome. What about any other, just safe falls that you all put in place for preserving capital?
Pivots, we've pivoted some, on some apartment deals. We had a third-party management company that was stealing, essentially.
Wow.
Us, it went horribly. We didn't raise enough capital to start with, and we had to pivot real quick. So instead of turning, all the tenants and renovating all the units like our original plan was, we had to make a switch. So we just did a sample size, renovated probably 6 to 10 out of 100 units, showed that we could push the rents to there. And then we, put it on the market and say, hey, look, this was our plan. This is what happened. Here's the pro forma numbers, and this is your path to do it. We've proven the concept and, gone ahead and exited the asset. So another conversion deal that we did, North Carolina, was we were converting an empty building to storage, and we were going through everything, got the permits, got the zoning, had everything lined up, and 2 minutes before we started the build out, major competitor opens right down the block. And if storage, that's probably the one thing that can crush a deal, is just more units online, just not enough population to serve it. So we pivoted. We built out a little bit. We used the back for industrial storage, and that was a plan that we had in mind. Said, all right, this numbers don't work anymore. Let's move it, and we ended up exiting that sooner than later. But for me, like you said before, I'll hit singles all day long. I don't have to hit grand slams and home runs.
Love that. I like just the attitude. Being satisfied, right? And just being consistent. There's just a lot of value in being just consistent, and not having the shiny object syndrome, I guess. Right. Yeah.
And that's, we haven't done any advertising. I think this is like my second podcast I've ever done. Everything's been word of mouth, and we've grown our investor base strictly word of mouth so far. And we continue to, because, we put the investor first, and we haven't missed, or I shouldn't say we haven't missed the target, but we've 100% win rate as far as I'm concerned. And win rate, I return more capital than you gave me. And
right.
that's another thing we pride ourselves on. And, our fund is doing well during this whole COVID thing. And, a lot of the gurus, so-called gurus and, people you see on Facebook and advertising everywhere, I think a lot of them are hurting, or they're going to be. And, when smoke clears, I think we're going to be one of the few that are standing.
What do you think helped give you the mindset or mentality of like just pushing forward or being able to just pivot and, just taking things as they're thrown at you, and because not everybody can do that, or they're not conditioned for that, or what was that for you that helped you to really have that type of just mental strength?
I think first and foremost, the people I surround myself with, my two, primary partners, are like-minded, they're conservative, and they're problem solvers. When we're hit with adversity, we don't, crumble and crawl into a corner. We strategize. No one panics. We get in a room and just ink out our options and make the adjustment.
Nice. No, it's so important who you surround yourself with. No doubt about it. Team members are so important. So Keith, what's been the hardest part of this syndication journey for you?
The hardest part, well, besides that initial 2-year searching for a property, I say starting with, no track record or little track record. It's hard to raise capital. It's, kind of what comes first, the chicken or the egg. Then when you build a track record and the capital's, plentiful, the deals are harder to come by. So, it's a balancing act. That's what led us into creating a fund. We thought that would be an easier vehicle to raise and purchase and give us the flexibility. And so far it's been better, not perfect. And, we continue to say, hey, our next fund, what can we do different? How could we add more safe falls and continue to raise capital and whatnot. So, we're constantly improving, constantly seeing how we do something better. And that's how I like to look at everything. And that's, after looking at thousands of funds or thousands of syndication groups, how can I do something a little bit better than everybody else? And that's what we try to do.
Well, what is a way that you all have recently improved your business that we could apply to ours?
Just our conservative mindset. We don't buy property off of speculation. We buy it off of, minimum cash flow. Most of the time, other than the conversion deals and some, construction deals we've done. But, we try to have that plan in place and say, hey, look, we're buying it at, minimum cash return. And what's the worst thing that can happen? And I have to be honest, I never thought a pandemic would be on our list of things to consider. But, we'll think of that next time also. So just, conservative mindset. And I'll just give you a quick story. Before this whole, coronavirus thing happened, we were under contract for a $10 million shopping center in Tennessee. And the tenants were two big box tenants were Gold's Gym, a call center, and a bunch of restaurants. And, before this, we were like, oh, shoot, this is all Amazon, resistant tenants, and it's doing well. It's in a growing area and all that. And then, bam, luckily, we didn't go through with that. And, but something, and just another thing, you don't know what you don't know. And, just think worst case, and, hopefully they do okay. But I'm glad I'm not stuck with that challenge right now.
Yeah. A few months ago, some solid restaurants and a Gold's Gym you would have thought were great tenants.
Yeah, it's great. So
yeah, so awesome. Well, yeah, and that's sometimes there's just things you can't account for specific, but there's other ways that you do. You have reserves, or there's other backup plans, like you talked about. We have a plan B, and I love that. Just that mindset is, what's going to happen when our plan A doesn't work. And so, what's been your best source for meeting investors right now?
Like I said, just word of mouth, friends, family, and just recommendations. Best recommendations we've gotten are through our investors' accountants. So those are always good when an accountant can refer somebody.
Yeah,
after doing their taxes and seeing their returns and whatnot. So that's just how we're growing right now. We're set up. We got cash on the sidelines, investors, hungry to go. They trust us, and we're ready to come out of this thing, firing on all cylinders.
Tell us, what's the number one thing that's contributed to your success?
Finding the right people to work with. Again, going back to my example of a crooked management company, we recently, hired a full-time manager and doing things in-house, and she's been, a lifesaver. My partners, you surround yourself with people that work harder than you and are smarter than you, and you'll be successful.
How do you like to give back?
Well, actually, just recently we bought a truckload of Amazon returned general goods, and we sorted it, and we're going to give all the medical and disinfectant and gloves and all that to the local hospitals in Greenville. So
nice.
That was a good. We got a pallet full of toilet paper also. So it's.
Congratulations. Wow. Well, Keith, I'm grateful for your time. Pleasure to meet you and to have you on the show. And just, you're stressing the importance of having a plan B and plan C, and just the mental strength that you have. I love just, knowing we're going to keep pushing forward. We're not giving up. We're going to, we can pivot. We can make this work, make it happen. And we can do it. If somebody else can do it, we can figure it out and do it too. So just thank you for that. Thank you for sharing that. Tell the listeners how they can get in touch with you and learn more about you.
You can visit our website, dualcityinvestments.com, and you can email me, and my phone number is on the page. So if they have questions, feel free to reach out.
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.